Good morning. Welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of September 2nd, 2025. Let's get started. SEAF signals for this week, reverting back to risk on technology, consumer discretionary, and communication services. This is after a week of having a little bit of more of a defensive aligned sector as honestly, the market is just looking for leadership. We haven't seen much leadership here, from technology or some of the other sectors, and taking a little bit of flipping back and forth. Kind of key thing to note here is the rankings, overall rankings here, relatively high. We don't have a single-digit ranking, which is odd. We're looking. SEAF model looks for that leadership, and we currently don't have it. As you can see, technology kind of coming back on, a decent-sized trading week at a 4, and really kind of being lifted by a strategic quarter. We can see that similar pattern here with consumer discretionary getting lifted by its tactical month, and communication services with its tactical month and strategic quarter. We've been seeing light flows overall, over the last couple of months, as we've kind of inch higher in the overall broader market. Seeing, again, relatively high scores across the board. Utilities coming in at a 10, taking a little bit of header after this last week. Same thing with consumer staples at an 11. Going into our heat map, it paints that similar picture, not seeing any consistency. When we see SEAF model really rocking and rolling on all cylinders, these top 3 are going to be dark green. These bottom are going to be dark red, and we'll have a little bit of that yellow, light green, light red here in the middle. We aren't seeing that right now. It's kind of all across the board. Financials coming in the top spot is not a SEAF signal due to a strategic quarter of 8. But coming in at 0.3, so not a significant number for the top spot. Coming in, energy at number 2, 0.19, that's decent. But energy kind of getting buried by tactical month and strategic quarter. And, like I said, technology coming in at 4.17. Overall, we were up on the week in terms of asset flows by 0.56. Not a single day over or under 1%. And 3 of the last 5 days were up days. Market's trying to figure itself out, and the SEAF model is kind of directing that, as we've been seeing. Overall managers last week took a bet on defensive sectors, and that didn't pay out. Was it a week too early? Was it we don't know that for certain. Again, this is not a predictive model. All we are doing is following the assets going around the 11 sector spiders, and kind of what happened here. They moved into defensive. It didn't bite. It didn't take last week. And then we have a move back to technology. Is this going to stick for a couple of weeks? That is not anything we know. We'll just keep kind of following the money. But once this money figures out where it's going and it starts to become sticky, you should look to the heat map here, because it will really dictate. You really can see here that when we have all greens, really dark greens across the top here and reds at the bottom, that money is really starting to accumulate. We're just not seeing that accumulation. The only major accumulation on the board right now is technology with for that strategic quarter of 1. Everything else relatively light, with the exception of healthcare, which has a negative accumulation. Heading over to our sector spider total AUM. For those of you who are new, this chart takes all the AUMs for the 11 sector spiders, adds it up to one magical number, and we plot that with a 21-day moving average. On the bottom here, we have the S&P 500. What is this telling us? Well, as we kind of zoom in here a little bit, we're up near that all-time highs, a little bit north of $320 billion for our 11 sector spiders. Not a lot of major movements here as we've climbed up. This 21-day moving average has been a relatively good indicator in terms of, if we break down below this 21-day, the broader market has underappreciated in terms of its price. Again, we've been making all new highs up on not super strong inflows, but steady progressive inflows. And once we really start to see this thing break down between that 21-day moving average, we're just going to want to keep it out on the broader market. But as of right now, through Thursday of last week, which is when we have our data, those asset flows still sitting up above that 21-day moving average. But we're going to keep close eye on it as, again, week overall flows in terms of progression upward have happened, and we'll see we'll see how this progresses forward. Heading into our rainbow charts. Wanted to bring up healthcare. Healthcare popped up into our SEAF signal last week and then kind of took a header. We got up into that favor and went right back down. We saw that little bit of relative outperformance and then relative underperformance. Like I said, managers could have, as it seemed we were defensively aligned last week, managers could have tried to make that bet maybe slightly a bit too early, and we went back into a void, and they went back into what was comfortable for them, which was technology. Let me find that for you guys real quick. Technology kind of had that reverse spike, and I wanted to bring these up, as we do tend to see the money moving a lot around the 11 sector spiders being almost reciprocal moves. So as you can see here, money flew out of technology. We dropped into neutral, as we did have some of that accumulation from that really strong upper favor that we had for a while. Similar situation going on for healthcare. We've kind of been at the bottom here. Money flowed heavily into healthcare and then came right back out. This money is trying to find a home. And that is really apparent here in these rainbow charts. And again, like you said, we see these kind of as a push you, pull me. As we watch the 11 sector spiders, money flowing a lot of the times you can see it coming out of one sector and then flowing into the other, which it did for technology and healthcare over this last week. Looking at consumer staples, similar thing. Had money kind of flow into consumer staples up into this favorite area, dropped right back into a void. Really strong downtrend in consumer staples for the relative outperformance versus SPY. Again, this isn't a predictive model, but we've spent a decent amount of time in this void. We did come up into touch favored, but back into the void, and we see the relative outperformance versus SPY part on this chart, regarding consumer staples. Energy showing a little bit of life, seeing it kind of creep up into this neutral space again. Again, I've been really hesitant on energy and providing any kind of context for leadoffs for energy, just because of what we've been seeing. It comes, touches, favored, drops. Comes, touches, favored, drops. We do get these little spurts of relative outperformance, but then it's preceded by a relatively stronger crash, and we do see this relative underperformance kind of not make these little spurts of relative outperformance worth it. Is that a predictive thing of what's going to happen here? No. If money flows strongly in energy, we stick up and upper favored. Energy has been a big winner for us in other years. But, as of right now, energy has kind of had the same trajectory. So while we do see money flowing into energy, like I said, 0.19% on the week, we're not seeing any kind of sustained strong flows into energy. If we continue to see that and we get in this upper favored, energy has been kind of on a downtrend, sideways downtrend, relative outperformance wise for quite a while here, but nothing to do here for energy yet. Communication services still trading in much of a sideways box, relative outperformance versus SPY, as we have, but ever so slightly uptrending in terms of its going back to last year versus that relative outperformance versus SPY. Kind of just had a reversal coming in from last week, being held up by that tactical month and the strategic quarter that is keeping our flows here. And as I said, we kind of went from a defensive leaning to back to our offensive leaning as the market tries to find a leader, and money's kind of really flowing around the 11 sector spiders, sitting here mid-favor. This is the SEAF signal for this week, and we do have a nice little short run of relative outperformance in terms of an uptrend going back to late July, early August, but overall sideways going back to February. Brought up technology and consumer discretionary. Same thing, kind of a bit of a sideways pattern here. We have this short-term trend from the end of July through August, as we went from a void neutral into favored. Consumer discretionary is a SEAF signal for right now, but I would like to mention that all three of our SEAF signals have a score above 9, which means they have a double-digit score number. We don't have a true upper favored leader here. We'll hopefully look for that to resolve itself for next week. But as of right now, we are just going where the money is going, and right now the money is going into consumer discretionary, communication services, and technology. So that's where we need to be. If that re-racks, that's one of the great things about SEAF is it's re-racking once a week. So, once we get new data, we can do an assessment, run it through our algorithm to figure out how much or how fast this money is flowing through, and we can be on to the next trend. But right now, again, we're offensively aligned, technology, communication services, and consumer discretionary, but the model is telling us that we are still looking for a leader with our lack of high scores. That is all I have for this week. I look forward to breaking down the model with you all next week, and thank you.